Hello, Clay here. Listen, today I want to talk to you about a further step in becoming a profit and growth expert, and that is business benchmarking. Taking your clients to a new dimension of context and meaning beyond the financials. I want to talk to you today about what accounting is, what we measure, and why we do it. If I were to break down accounting and the importance of accounting information into its very basic, it would be this. In business, there are two types of transactions. I spend money and I receive money. Now, accounting basically measures is if I spend a dollar here, how much do I make back for that dollar over here? And if you don't keep track of that, it's difficult to manage your business. You see, the best way to manage your business is to be able to understand for every dollar here, what do I get back over here by client, by product, by vendor, by employee, by department, by advertising source. We break it down in every different way possible so that we can optimize spending and understand where we're spending over here and not getting a return over here. We can quit spending over here, reallocate those dollars to where we're spending a dollar here and getting 5 to 10 back over here. And as we keep doing that every month and making those decisions that where we spend money maximizes our return, we change the profitability structure of our entire business. That's the business of accounting. Now, what we do is empower our small business clients then to work on their business instead of just in it. And we do that by not just producing their financials every month, not just reporting what performance has gone on in the past, but helping them determine the performance in the future. Okay? Now we do this for our clients basically by taking them through the business improvement cycle and allowing them to work on their business, not just in it. So we take the raw transactional data and organize it into information, predominantly the income statement and balance sheets. Now this is where a lot of bookkeepers and accountants stop. They give that to their client. Call me if you have any questions, and the poor client is left, well, I don't even know what to ask. So he files it away and never looks at it, never uses it to help change his business. But we go further as profit and growth experts. We analyze the data and help him, through our analysis, give it more context and meaning so that he can make better business decisions from which he can then put together action plans and implement those action plans to create better raw data the next month that we begin and take through the information portion of the cycle again. Analysis, context and meaning, decisions, action plans, implementation, and we do this with him every single month. How well do you think that will help him grow his business more profitably? So what we do then is basically take that cycle, and as we go through that cycle, we move up what Edward Deming called the wisdom pyramid that starts with data, organizes that into information that we can then study to glean knowledge. And as we do that again and again, we start to see patterns, we start to see relationships. We build what is called wisdom in our business. This is where your instincts start to take on a whole new effectiveness in being able to make business decisions as a business owner. Now, let me put this into some meaning for you and why context and meaning are so important in being able to make good business decisions. Let's say that I tell you as a business owner, hey, you've made $20,000 in net income. So what does that mean? Is it good news? Is it bad news? Well, it depends on the context. For example, let's say that we have $20,000 in net income, but our gross income is 1.2 million. Then it's not so good news. But if our gross revenues are only 100,000 and we have 20,000 of that drops to the bottom line, well, that's a lot better news. So the internal context, one internal number to another internal number is really important. So we have a couple of types of those relationships, one data point to another data point within the same report for the same time frame. Usually in ratios and percentages they're expressed, or comparing internal data to internal data period to period. For example, this month versus last month, this quarter versus last quarter, or the same quarter last year, this year versus last year. And also looking at trend analysis within the data helps give us more context and meaning to the data, just using our internal data. But there's a whole different context that is very powerful, and that is external context, okay? This is where you compare your internal data to industry averages and standards by ratios, percentages, again, the period to period, by month, by quarter, by year, and doing trend analysis against other businesses within your same industry. So for example, if that $20,000 was really good for businesses in our same industry of our same size, that would be good news. But if the $20,000 is anemic, for example, let's say the industry net sales was $100,000, well, then the $20,000 might not be good news. And even if we were $40,000, if the industry average was still $100,000, then even though it was good, we knew we could do better by industry standards.